Hello, everyone. This is Murtaza from Instaccountant. So what just happened is I ordered a few groceries on Instacart, and I just got those delivered at home. So that actually brought this to my mind, and I should talk about Instacart as well because more and more people are doing Instacart these days. The other delivery drivers, they are kind of moving to Instacart. So it's getting very popular. So I said, okay, let's talk about Instacart's taxes. The first thing, I'll start from the beginning. As you know that, okay, if you're employed, like you're doing any other job, part-time or full-time, and that means you're employed. That means that your taxes, some of the income tax and other things are being deducted at source. Your employers are deducting those and sending to CRA. But that doesn't happen if you're self-employed. So in case of Instacart, if you're doing Instacart, you are a self-employed, right? And you can be an employed and a self-employed at the same time. Okay, so that's why a lot of people do their day jobs and they are doing Instacart in the evening or on the weekends, so that you can do both, right? The difference is that in case of Instacart, you're not getting any income tax deducted at source, right? So Instacart won't deduct any income tax off of your income. Rather, they would, whatever they're collecting on your behalf from the work that you perform, like delivering groceries, they just take that money, take their commission out of it, and send the rest of the money into your bank account. Now you are responsible for your taxes then. The second thing is, let's talk about the income. So, Instacart, if you will receive a T4A, so after 31st of December and by the mid of February, you should be receiving a T4A slip from Instacart. Instacart would send you a T4A slip, which will have the information about how much you earn throughout the year, right? And that amount it's actually in box 48. So that amount is the net amount, which means that Instacart has already deducted its commission or its fees from your gross income, and this is the amount that you earned after those deductions. T4A slip, as you know, if you don't know, I have made a detailed video on what T4A slip is. You can watch that for details. But a T4A is generally issued to people who work as a contractor for someone, for a business or a corporation, right? So you guys are taken as contractors by Instacart. That's why they're issuing T4A slips to you. So once they issue that T4A slip to you, they're also sending the same information to CI. So that means that um, sometimes this should not happen, but sometimes self-employed people say, okay, we're not going to disclose this information on tax return. So that's a bad thing, right? Because you're gonna get caught, right? Because let's say Instacart, if they're sending you a T4A slip, it's a tax slip. So one copy, in simple word, is going to you, and the other one is going to CRA. So CRA already knows that how much you made off of Instacart. Okay, so that is how they will report your income on and provide that information to you. Like Uber Eats, they have their own tax summary, but not a T4A slip. Nobody else provides a T4A slip. It's just the Instacart. When you compare between Uber Eats and DoorDash and Skip the Dishes and Instacart, so they generally do that. The other important thing is that as a self-employed, you're gonna be responsible for calculating and obviously if you have to paying your taxes, right? So for that, what you're gonna do is you're gonna have your income, which is gonna come through T4A slip, And then you are able to deduct all the expenses that you incurred to earn that income, right? So, for example, you earn $1,000 income from Instacart, and let's say you just spend $600 on gas to earn that $1,000. So now, $1,000 minus $600 is $400. So that $400 is your taxable income. That is the income which you're gonna be calculating income tax on and pay taxes on that $400, not the whole of like the $1,000. What does that mean? That means that the expenses are very, very important. Okay, and you have to keep good record of your expenses, because at the end of the year you cannot just memorize all the expenses that you took care of during the year when you were doing Instacart. And I am talking about the most minute expenses to the bigger ones. I'm going to be talking about each expense in a bit, but you need to make sure that you're recording those expenses somewhere, and you're also saving the proof of those expenses, like the invoices and the receipts and any other thing, right? So we have actually developed an app for that purpose, for self-employed people like yourself, the people who are always on the go. It's called Zoom Books. So Zoom Books would help you. Yeah, for example, you just have you just bought gas, and this is the receipt for the gas. So you just take a picture of that receipt, and that's it. Just submit. So Zoombooks will save the receipt digitally, and do the bookkeeping. CRA requires you to keep receipts for all your business expenses for 6 years. So you will have the receipt digitally saved. You can access it anytime, print it, send it to CRA if you require. And the second thing is that Zoombooks will also do your bookkeeping. It will categorize the expenses properly and keep your books in a good shape, and always ready for the tax time. I am telling you, this is gonna save you a lot of tax. So take that seriously. Keep the receipts and the bookkeeping in good shape if you are self-employed. It's very important for you, because I see a lot of clients who just make this mistake, and they're sitting in my office, or they're saying, hey, I had this expense but I don't have a receipt. So that's a problem, right? So you keep the receipt, and since you're already using apps and technology, why not use an app which helps you save tax? So anyway, talking about the expenses, let's talk about the big expenses first. And before that, one more thing, because you are doing, in this gig economy, you will be using your personal car for, doing these deliveries, grocery deliveries through Instacart. The expenses that you can claim have to be business expenses. What that means is that, for example, you drove 1,000 miles during the year, right? 800 miles out of those 1,000 were for doing Instacart work, right? So that means that, let's say, any expense related to your car has to be, you can claim 80% of those expenses, uh, and because the rest of the 20% are of personal nature. So you can only claim 80%. So that percentage is usually uh, calculated on the basis of miles. Now, coming to the expenses. So, for example, the bigger expenses are your car. If you own a car, if you're financing it, you can claim the depreciation on the car every year. And if you're leasing it, you can claim the lease amount that you're paying every month or biweekly or whatever. If it's on cash, you own the car fully, you can still claim the depreciation on that vehicle, right? Business portion. Okay, so that's a bigger expense. Then gas, again, it's a big expense. So you can claim the gas expense, again, the business portion of it. You have to keep the receipts for all the gas that you used. And again, you can use the Zoombooks app for that. Insurance, your driving insurance, definitely. You can claim that. And that will be for the business part of the insurance expense you can claim. Car maintenance, definitely claimable. Winter tires, windshield washers, this and that, all those things, right? Um, car seat covers, any expense related to your car is claimable. Make sure that you're claiming those and keeping a good record of those. Expenses related to your phone, your data, internet, yes, that is claimable. Expenses related to any supplies, like for example, you have some car supplies, you have some extra bags, or yeah, sometimes you have bigger, orders to take care of. You might have had bought a hand truck or something, a trolley. So yes, definitely you can claim those expenses. Those kind of supplies are business expenses. Other expenses could be, any expenses related to your to the activities that you did for Instacart to earn income. All those expenses are claimable, the business portion of those expenses. So again, for example, phone expense. Now, your phone is a personal thing, but you're using it for Instacart as well. So you have to divide that. You have to find out the business percentage of it, and you can claim those. Other expenses may include parking, very important. People generally, the drivers who are doing Instacart, they generally forget about it. It is a claimable expense. So if you're buying parking of 15 minutes, whatever, in front of an apartment building in the downtown or something, it is claimable. So keep the receipt with you. That's gonna definitely help, and you can claim all of it. Okay. The business portion, it is for business. So that the business portion is like 100%. So it's all business, right? So these kind of expenses you can claim. Last thing I would say about HST, for Instacart, again, if your income is going over $30,000 in any quarter, you should register for HST, and you should be charging HST on your services, and that HST is not included in your T4A income. So you have to do that calculation, which your accountant will be able to do that, right? So at the end of the year, you have to take all the income, which is pretty simple, the T4A slip, and the expenses information to your accountant to file your taxes. And again, if you're using Zoombooks app, you're just gonna record those expenses during the year, and you can actually see, okay, how much did I spend on gas in the last week or the last month, or how much I spent on, let's say, any other phone expense in because you're recording those. So it gives you a really good insight. You know, if you want to control your finances, you're gonna record. The first thing is that you have to record those. So Zoombooks is actually designed for those people who are always on the go. So you can use that. And then at the end of the year, you can just go to the web portal and export an Excel. So your bookkeeping is already done. You just take that Excel spreadsheet and send it to your accountant, and they're happy, because it's the Zoombooks is built by accountants, so you can rely on that data. All right, guys. If you have any questions related to this Instacart or any other self-employed thing that you're doing, I'll be happy to answer it. And you can, if you like the video, like the information, please like this video and subscribe to my channel. All right. Have a great day. Bye.